Let's now talk about this GENSOL meltdown. So the crisis basically is that GENSOL Engineering, uh, which is the company in trouble. The brand which we are familiar with is Blue Smart EV taxis, and Engineering is a company which is also the same promoter for that company. And this stock has been hitting lower 5% circuits after SEBI has barred the promoters from the securities market. So the business model here was that the Gensol Engineering was a renewable energy EPC service, and they diversified into electrical vehicle leasing. So the same promoter had two companies, one which is the operating of the taxis, and one which was supplying the lease of the taxis to the other company. And they were having phenomenal growth. So 61 crores in FY17 grew to 1100 crores in FY24. Net profit also was growing from 2 crores to 80 crores in this same time period. Operating profit also was up, so everything was looking good. And there was a one is for 10 for 1 stock split that happened. And this was a blue-eyed company, basically, where everybody was looking at how to piggyback the EV run, and a startup that was excelling in EVs. And then the phase 2 happened, where the red flags started to show up, where promoter holdings started to drop 70% in FY20 to 35% in FY25. So steady exit of the promoters from the shareholding, and a lot of rumors about complaints emerging regarding loan defaults and share price manipulation. And then, of course, the SEBI investigation happened, where the 975 crores raised for EVs, and it was found that almost 200 plus crores was rerouted through a car dealer to promoter entities, used for luxury spending, buying apartments, personal expenses, and basically a complete corporate governance failure. So company was being run like a personal farm and not like a public company. A lot of fake documents were submitted to credit rating agencies to show timely repayments. And this is somewhat reminding me of the Satyam saga, where Mr. Raju was doing the same, providing fake documents to the banks, till the point that the entire show back house of cards came crashing down. So lack of internal controls, basically funds moving via complex layering, so that nobody will be able to figure this out. But all these things can only work for only for some time. Anmol and Puneet Jaggi were banned, the promoters banned from accessing the securities market. SEBI has warned retail investors on these lapses. The stock has hit 5% lower, of course, but the stock is coming down from 1200 plus to nearly 120 right now. So all this has happened much later than the stock price has crashed. So if you were having this stock, and Mr. Jaggi was constantly coming on television and reassuring you that he will do everything to pull the company back up, but the price was constantly moving down. So the price was giving you an indication of what is happening in the markets, while the narrative was that we will save this company somehow. And from 1124 we are down 83%. And the split, that 10 is to 1 split that was done, probably was to suck in more investors into this company. So let's look at the charts and see that how you could have exited this company. So July 23 to Jan 24 was this phenomenal run, where post IPO the stock went from 400 odd rupees to almost 11 1200 rupees, and then the troubles began, and there was a very sharp crack from nearly 1400 down to about 800. That itself should have given you an indication that something is wrong in this company. In just 4 weeks the company went from 1400 to nearly 800, and then it consolidated for some time, in fact recovered back to 1100 odd, and from there 1100 down to 800 again, and from 800 vertically down to 122, 46% drop within 1 month. So the supports that were breaking on the charts very clearly, one support was very near the 800 mark, that could have got people out in case the first move here did not take you out. This should have been a complete exit point for most. Another break point was somewhere near 650. Third, of course, was the new all-time low, somewhere near 420 rupees. And then, of course, it just kept going down, 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 down. And right now also, exit is not going to be easy. Moving averages didn't work very well here, because there was not so much history on the charts, but still the 200 DMA was breached below 1000 rupees. In general, if a stock is below 200 DMA, do not stay in that stock if you are a trend follower. Super trend, if you are using, also has been, in a sell signal since 900 odd rupees, so that would have also saved you. Any indicator of trend style would have taken you out. The biggest problem, however, is that, just look at these sporadic volumes. So these are the places where, people got sucked in, either due to the stock split or due to the promoters speak on TV that they will do everything to revive the company. And even yesterday, post as the SEBI order was getting announced, there was a lot of buying. Maybe people thought that the worst is over, but today again, the stock is down on the circuit. The momentum angle here is that, momentum will stay with stocks only till they are in trend. And once, the trend has got smashed, you will get out of momentum strategy, and hence you will not be sitting in a stock that is bleeding endlessly. So even though, you could have made some part of this, maybe lost some part here, but you would have been out here for sure. You would not remain in the stock, post the first fall. So losses often, trigger revenge trading, and that is exactly what is happening. Like I always say, those who average their stocks are basically average investors, and they will have average outcomes. So losses often, trigger revenge trading. So once a person is in loss, they feel like, they have to make up that loss from that stock itself by averaging, by doing shorter term trading within that same stock. And that, sunk cost fallacy of trying to recover loss by doubling down, makes people go deeper and deeper into the loss. And this just does not lead to money losses, also waste time and opportunity, where that opportunistically you could have used that capital elsewhere. uh, Also, momentum did not pick Gensol even during its 3x rally, perhaps because of poor volumes. And, you did not need to get into the FOMO. And even if some strategy picked it up, they would have gotten out, within 20-30% of the fall. Basically, you remain bias free and rule bound. So no emotions, just data, and you buy, when the strength shows up, and you sell when it fades. No hope, no belief, no believing the promoter, no believing anything, any number, because that can be motivated, as we've now learned from this mistake. So write this down, that every entry must come with a clear exit plan. Rather, every exit plan should be very clear before you are making this entry, whether it is momentum, fundamentals, or news based. You don't have a rule to exit, you are basically flying blind. So a stock without an exit plan is like a bad date without a goodbye. You're stuck with the consequences longer that you want. Do you have clear cut exit plans for all the stocks within your portfolio? Let me know in the comments. And thank you so much for watching this. Do like and share these videos, and do subscribe to this channel. Thank you. Bye.